So you're a founder. You're about to make that first hire, and you're probably dreading one thing, right? Payroll. Yeah, it's complicated, the stakes are super high, and you absolutely have to get it right. But hey, don't worry, that's what we're here for. This is your step-by-step guide for 2026, and we're going to take you from feeling anxious to totally confident. Let's dive in.
Look, if you're feeling a bit overwhelmed by all this, you are definitely not alone. I mean, it's a super compliance-heavy, really high-stakes task, and let's be honest, most founders have exactly zero background in it. But like I said, don't sweat it. We are going to break it all down, piece by piece.
So why is this such a big deal? Well, let's just talk about the stakes for a second. If you make a mistake, the IRS can hit you with a failure to file penalty, and we're talking 5% per month. And that can go all the way up to a really painful 25% of whatever tax you owe. For a new company, that's a massive hit.
And oh yeah, it doesn't stop there. If you're late depositing your payroll taxes, that penalty can climb all the way to 15%. And you know, these aren't just some theoretical risks you read about in a textbook. This stuff happens to real companies all the time. So getting this right from the very first day, it's completely non-negotiable.
All right, so here's our game plan. We'll kick things off with why this matters so much. Then we'll get into a pre-launch checklist, the 9 big setup steps, cover what's new for 2026, and wrap up with building a solid foundation.
You know, getting payroll right isn't just about dodging those nasty penalties. It's really about building a solid foundation so your company can actually grow. When you get this right, you're building trust with your team, and you're creating a smooth operational backbone for your entire business.
And listen, for 2026, you've got to be paying attention because things are changing. There's new federal legislation all bundled into something called the One Big Beautiful Bill Act, and it's bringing in new compliance rules you need to know about from day one. Seriously, a solid setup right now will save you from some major headaches and really expensive fixes later on.
Okay, so before you even think about hitting run payroll, there are 4 foundational things you absolutely have to get done. Let's walk through them.
We're talking about getting your federal tax ID, registering in your states, putting together an employee handbook, and, this is a big one, classifying your workers correctly. All right, let's break each one down.
First up is your EIN. The easiest way to think about it, it's basically a social security number, but for your business. If you're a founder based in the US, you can actually hop online and get one in just a few minutes. Now, for international founders, it might take a quick phone call to the IRS, but it's totally doable.
Okay, next up, state registration. And this is where things can get complicated fast, especially if you're planning on hiring remotely. You've got to set up accounts for income tax withholding and unemployment insurance in every single state where you have an employee.
And just to put a number on that complexity for you, businesses with employees in more than one state face a whopping 340% higher compliance burden. I mean, that is a massive jump. It's a huge reason why you've got to get your systems right from the very beginning.
All right, number 3 is your employee handbook. And please, don't think of this as just some formality you have to check off. It's literally the rule book for your company. And for 2026, it's got to be up to date with some key changes, like new paid family leave programs popping up in a few states and new contribution limits for benefits like FSAs.
And last on our pre-launch list, but definitely not least, is worker classification. This one is absolutely critical. Getting this wrong, say calling an employee a contractor, can lead to a world of hurt. We're talking back taxes, penalties, and serious legal trouble. You have to look at the federal rules, and then you've got these often much stricter state rules, like the famous ABC test in California.
Okay, with all that prep work out of the way, let's get into the real playbook, the 9 steps to actually setting up and running your payroll without a hitch, right from day one. First things first, you need to pick a pay schedule. Are you going to pay people weekly, bi-weekly, monthly? But hold on, before you decide, you have to check your state laws, because a lot of them have specific rules about how often you have to pay your team. And here's a little pro tip for 2026. There's a weird calendar anomaly that means if you pay bi-weekly, you might actually have 27 pay periods instead of 26. Yeah, that can totally mess up your salary calculations if you're not ready for it.
Next up, you've got to decide how you'll pay everyone. Direct deposit is pretty much the standard these days, but you'll still need an authorization form from each employee with their bank info. Then comes the big decision, choosing your payroll system. You basically have three paths. You can try to do it all manually with spreadsheets, which, yeah, it's the cheapest, but it's also super risky. You could use payroll software like Warp, which automates everything and keeps you accurate. Or you could outsource it to an accountant, which is totally hands-off but might not be as automated.
Okay, step 5, collecting the right paperwork. Seriously, getting this wrong is a massive headache. For every single W-2 employee, you need 3 things: an I-9 for work authorization, a federal W-4 for tax withholding, and whatever withholding forms their state requires. Now, for your 1099 contractors, you just need a W-9. The key? Have all of this in hand on their first day.
All right, let's zoom in for a minute on the specific numbers and rules you absolutely have to know for 2026. These are the nitty-gritty details that your payroll system needs to handle perfectly.
Okay, let's run through the highlights. The 1099 reporting threshold for contractors, that's jumping up to $2,000. The dependent care FSA limit is now $7,500. Here's a big one for retirement plans. If an employee makes over $150,000, their 401k catch-up contributions must be Roth. That means after tax. And finally, the Social Security wage base is up to $184,500.
All right, we're in the home stretch now. This last part is all about actually doing it, running that first payroll and setting up the good habits that are going to keep you compliant and keep your team happy for the long haul.
So, it's time for execution. When you run that very first payroll, I want you to triple check every single number. Then, from that point on, build a consistent, on-time process. Trust me, nothing kills morale faster than late paychecks. And finally, you have to maintain secure records of absolutely everything.
And on that last point about records, you need to be specific. The Fair Labor Standards Act, that's the FLSA, says you have to keep payroll records for at least 3 years. The IRS, they want your employment tax records for at least 4. And here's the kicker. Always check for state-level rules because they can often require you to keep them even longer.
You know, when you boil it all down, it comes back to this one core idea. This whole process isn't just about ticking a bunch of compliance boxes. It's about building a strong, professional foundation that lets your company scale without getting tripped up by operational messes and legal landmines.
So as we wrap this up, I want to leave you with a question. After you've run that first payroll, and you will, take a second and ask yourself, is this system I just built ready for employee number 10? What about employee number 100? Because thinking about how you're going to scale right now is what will define your success down the road.